So the last part of this problem asks us to calculate the operating income for this organization. So what I'm going to do to show you how to do this is I went right back to page 40 of the textbook and I copied the template that we were shown how to calculate operating income for a manufacturing organization. I even colored it the way the book did. I'm going to fill it in to just show you this is the process you need to get used to with a manufacturing company in order to see how the costs flow all the way through to the income statement when we've got various stages of inventory and types of inventory. So without further ado, we'll go ahead and get started here. So the problem gives us certain pieces of information that I'm just going to plug into here, like my revenue. They told us in the problem that revenue is $594,000. So plug that in, and then we go through this next section to calculate the cost of goods sold. Again, this should be a review of Accounting 201 and 301 on how to calculate cost of goods sold. You take your beginning finished goods inventory. In the case of this company, it's zero because they just started operations January 1st, so they had no inventory. Then you get this cost of goods manufactured, and that has to come from this schedule of goods manufactured. It's a fairly long and involved process on how we calculate it. So let's jump down next to the cost of goods manufactured statement. So we start first with our direct materials, and it asks us what were my beginning direct materials. And of course this company again just started operations, so we had no direct material when we began operations, and then we bought some direct material throughout the year. They told us that well, we don't even know how much we bought. We know how much we used in the manufacturing process. So this is a piece of information I'm going to kind of back into here and show you how to figure out this. So I created a T account right here for my direct materials. So what we know is we started the year with nothing. We know we ended the year with $1,440. That came from the very first part of this problem that we worked through already. And we know we used $147,600 in direct material because the problem tells us this. So it's mathematically what we start with plus what we purchased. That's what we're missing, is how much did we purchase? How do we add to direct materials? Well, we buy them, right? We need to know how many we purchased, and they don't tell us this in the problem. But what I do know is this is a mathematical equation that has to work out. I start with nothing, I end with 1440, and I use something, so I can work backwards. I can say, well, that logically tells me that I had to have bought $149,040 worth of material in order to have that much left, this much left, and have used that much. So this is the number that we will plug in to the direct materials purchased. And the materials available for sale, or actually to use, it shouldn't say for sale, to use in the manufacturing process is what we started with plus what we bought. So this is a fairly logical calculation here. Less, we subtract the ending inventory on December 31st, and again that came from the first part of this problem, to calculate the direct materials used. So direct materials used is how many I had available to use minus what I had left at the end of the year. So my direct materials used is 147,600, and this was a bit overkill what I showed you here, and this problem is fairly simple because they told us here, it got cut off a little bit, they told us the direct materials we used was 147,600. So yes, you could have actually plugged that in here. However, most problems we'll work through, at least later in the semester, don't have a zero starting position, which makes this more complicated. So anyways, that's where we get the 147,600. We have to calculate how much direct manufacturing labor we have. Let me get those back on the screen. Direct manufacturing labor was simply given to us at 38,400. So the goods manufactured is comprised of the material, the labor, and the overhead costs. We've got two of the three pieces. Now we have to plug in the overhead costs, and these are the three costs listed up here that are indirect in nature, can't be traced right to the product that we're making. So the plant energy costs, $2,000. My indirect manufacturing labor costs, now watch, I'm going to combine both of these, both the variable and the fixed, because for the purposes of the cost of goods sold, I don't really care if they're variable or fixed. They both go into the calculation. I do the same thing with the other indirect manufacturing costs. And so here are my overhead costs. I add all three of those together to get 60,000. So my total manufacturing costs incurred for the year are my material costs, my labor cost, and my overhead. So 246,000. And we'll get into this later in the semester as well, we got to take into consideration the work in process we've already had. And at the beginning of the year, we had no work in process because we just started this company. And so my total manufacturing costs that I need to account for are $246,600 or $246,000 even. My ending work in process, the problem also tells me, if you refer back to the problem, that there is nothing left in ending work in process. So this is a nice clean problem where I had $246,000 in my cost of goods manufactured. This number comes all the way up here into the cost of goods manufactured, 246. So the goods available for sale are what I started with, which was nothing, plus what I manufactured, which is 246. So my goods available for sale is 246. My ending finished goods inventory, we calculated that in the last video that we went through, or actually the problem tells us it's $26,000. We calculated the units. And so my cost of goods sold is actually my goods available for sale minus my ending inventory. Cost of goods sold is 220. So my gross margin is my revenue minus my cost of goods sold. And then I peel out these, remember these are period costs, these operating costs here are listed here in the yellow. We ignored those before in our prior computations in the prior portions of the problem. My manufacturing and my marketing and distribution customer service costs are these two added together, which are both the variable and the fixed. And my administrative costs are this $56,000. So my total operating costs are going to be the two added together, 232,000. So my operating income is my gross margin minus my total operating costs. So my operating profit or my operating income is $142,000. So this, again, this process, you didn't necessarily have to go through this whole thing to get what we calculated here in this problem, but we're going to use this over and over this semester as we get into the latter parts of the text.